Good day, everyone. You're welcome to this week's Business and Investment Tips Program, a production of RCCG Christ Church Radio with Dr. Ayodeji Ebo, an investment professional. This week, we focus on business confidence stays positive, but costs and hiring pressures persist. The Central Bank of Nigeria published its July 2026 Business Expectations Survey last week. Conducted from the 6th to the 10th July, the survey covered 1,900 businesses and achieved 99.9% response rate. For confidence measures, a reading above zero indicates optimism. For business constraints, a higher figure indicates a more severe problem. Confidence has fallen sharply since February. The overall business confidence index stood at 5.7 points in July. Although still positive, this represents a sharp decline of 33.7 points from the recent peak of 39.4 points recorded in February 2026. The decline followed the outbreak of the US-Israel-Iran conflict at the end of February. The resulting disruption to global energy supplies, higher costs, and increased economic uncertainty may have contributed to weaker business confidence. A prolonged conflict could keep business sentiment subdued, particularly through higher energy and transportation costs. Conversely, a resolution could remove a major source of uncertainty and provide a significant boost to confidence. Encouragingly, businesses expect confidence to recover to 20 points in August, 27.8 points over the next 3 months, and 35.8 points over 6 months, close to February peak. However, domestic challenges such as high interest rates, insecurity, and multiple taxation could still limit the pace of recovery. Investment tip. Investors should monitor geopolitical developments alongside domestic economic conditions. A resolution could improve sentiment, but sustainable business performance will still depend on demand, cost control, and access to affordable finance. Industry leads as agriculture loses momentum. All three broad sectors remained optimistic. Industry improved from 10.5 points in June to 11.5 points in July, while services rose from 2.9 to 3.6 points. Agriculture, however, declined sharply from 12.2 to 3.4 points. Looking at businesses' own operations, electricity, gas, and water recorded the highest confidence at 59.4 points, followed by mining and quarrying at 50 points. Investment tip. The sharp slowdown in agricultural confidence deserves attention. Investors should assess company-specific results rather than assume that every business within a promising sector will perform equally. Confidence remains uneven across regions. The Northwest recorded the strongest current regional confidence at 16 points, followed by the Northeast at 15.1 points. In contrast, the South-South and Southeast remained pessimistic at -9.8 and -9.3 points. Encouragingly, every region expects conditions to improve from August, with the Northeast showing the strongest medium-term optimism. Strong expansion plans, cautious hiring. Businesses plan to expand but remain careful about adding workers. Electricity, gas, and water recorded the strongest expansion outlook at 85.7 points. Mining and quarrying had the best employment expectations, but at only 9.4 points. Employment expectations were negative in manufacturing, agriculture, market services, and non-market services. Investment tip. This may suggest that firms are prioritizing productivity and cost efficiency. Investors should look for companies that can grow revenue without allowing expenses to rise too quickly. Orders improve, but finance remains tight. Total orders and business activity recorded the strongest confidence among the selected operational indicators, while financial conditions and access to credit were positive but weaker. Expectations for business activity rose from 26.4 points for August to 33.8 points over 3 months and 41.2 points over 6 months. Investment tip. Rising orders are encouraging, but investors should confirm that sales growth is translating into cash flow and profit. Taxes, insecurity, and interest rates remain the big obstacles. High and multiple taxation was the leading business constraint, scoring 70.8 points, followed by insecurity at 69.7 points and high interest rates at 66.3 points. Unfavorable political conditions and high bank charges also remain significant. Investment tip. Companies with low debt, efficient logistics, reliable power arrangements, and disciplined cost management are more likely to withstand these pressures. Naira optimism, cost credit, and stable capacity. Businesses expect the Naira to appreciate gradually over the review periods. However, borrowing rates are expected to remain elevated, with only marginal relief over the medium term. Average capacity utilization improved slightly from 55.3% in June to 55.9% in July, led by mining and quarrying at 67.5%. The investors' takeaway. The July survey points to cautious optimism, not a broad economic boom. Demand, orders, and expansion plans are improving, but agriculture has slowed, hiring is weak, and operating costs remain high. Investors should accumulate gradually, focus on fundamentally strong, efficiently managed managed companies and avoid relying solely on general economic optimism. Thank you for listening. Please join us same time next week for another interesting and insightful session. For questions, comments, and feedback, kindly forward to ebo.ayodeji@gmail.com or send an SMS to 070-8246-3747. Stay blessed and have a great week. Bye.